All right. All right. Morning, everybody. Give me just a moment here. Just a moment, and we will get rolling here in a moment. Had to fix something already on my YouTube stream. Let's see here. Just going to go and fix something real quick. Let's see here. Just got to go in and put the new link. As you guys come in, if you would, just let me say hello. Let me know you're here. Let's see here. And we'll get started here in just a moment. Posts. Let's do this. Edit. All right. Give me just one moment. Got plenty of stuff to talk about today. And we actually have some economic news releases this week. Just wanted to get the link sent out to the Discord real quick. And there's my drink there. So if you guys would, just as you pop on, just say hello to me. Let me know you're in. And we will get rocking and a rolling here. Let's see here. Share screen. Share screen to the calendar. Got my screen shared. We are off and running. We get this week's economic releases up on my screen. There we go. And like I say, I'll just wait till I see a couple of you pop on and we'll get rocking and rolling. I am in a trade, a pretty ballsy trade, I gotta say. quite the ballsy trade, let's put it that way. So I'll just give it another couple minutes or so till I get some of you in here. Let's see here. All right, there's my trade there. All right, we are rolling. And of course, I messed up I created my live stream yesterday for today, and somehow I didn't have the webcam in correctly. So I tell you, you mess up one little thing creating on YouTube Studio, and it messes up. So somehow or another, when I created my stream, it wasn't hooked up to my webcam. It was saying streaming software. So I don't know how in the world that happened, but nevertheless, had to correct that right away this morning. So we should be up and running. Again, if you guys would just drop a hello in the chat as you come in, just let me know you're here. As soon as I get one or two of you rolling, we'll get rolling. Okay. I don't want to, as always, I just don't want to talk to myself. So I'll wait till I see one or two of you pop in and we'll get rolling. So I'll give that another minute or two. And let's see here. Let's see. All right, there we go. All right. I think we're good on that. So yeah. All right, guys. Yeah. Let me know if you're here. Let me know if you guys are in the chat at all. So far, I don't see anybody. I'll give it a minute. Yeah, I knew this would probably mess up. So like I said, guys, as you pop in, I set the stream up yesterday for today and had it set up incorrectly on the a third-party software, and I don't know how that happened because I disconnected it. So obviously, so first thing right away, I had to create a new stream with all the hashtags and the title and the description and everything. So, so yeah, guys, just let me know if you're in here. Let me know as you pop in, and we'll get rocking and rolling here in a moment. Got a lot to talk about. Quite a few different items. Obviously, yeah, we'll lead off with the Forex Factor calendar here and talk about some little bit of piece of news that happened over the weekend. I don't know. You guys might have heard about somebody named Maduro getting captured. We'll talk about that for sure. Give me 1 second. I'm going to get my water. All right. Got my bottle of water. Can't stream without my water. My throat gets dry periodically. All right. So, guys, let me know as you come in, please. I'm going to go ahead and get rolling, get rocking and rolling here. Economic calendar. So it's been a long couple of holiday weeks, if you ask me, guys. Anytime we have holiday weeks, it's obviously a lot lighter on the news front, the economic news front. So this was obviously the New Year's week here. Just a recap, quick recap. And all we had was a couple US dollar reports. So the FOMC minutes came out talking about what we already knew about, which was the rate cut that we had. The hawkish rate cut we had. So all that came out, but then the only other thing we had was the unemployment claims number for the U.S. Now, that was a good number, okay? Forecast was for 219,000, but we only had 199,000. So that's 20,000 less claims. So that's 20,000 more people that still have a job, okay? Anytime this particular number is low, that's a good thing for the U.S. dollar. It's a good thing for the economy. It's a good thing for stocks because that just simply means more money rolling through the economic machine, okay? Adding to the GDP and all of those items. So yeah, it was a good week, albeit very, very light on the news. It was just the one event that came out. So that was that's how quickly that recap came for New Year's week. So and then just going back to the week prior, which obviously was Christmas week. Okay, just a reminder that we had just a couple items over here as well. Unemployment claims, that number was good. Now, obviously, this week or this previous one was 199,000, but even the previous week, the Christmas week, was light because they had forecast 424. So it's nice to see that the unemployment claims number is starting to go down. Okay, from an economic standpoint here in the States, the GDP number was looking pretty darn good as well on the 23rd. A full 1%. Remember, that was a full 1% increase over the forecast. So they forecasted it to go up 0.5% down, but instead what we got was I guess it'd be a 0.5% increase, but it was obviously a 1% increase over the forecast. So yeah, that was a really good couple weeks for the dollar, albeit very, very light. So yeah, we get back into this week, which is our first full week post all the festivities and Christmas and New Year's and Hanukkah and Boxing Day and all that. Okay. Time to get back into business of 2026. Today, okay, just the one major event today, and that's the ISM manufacturing PMI data release that we're getting. So that'll be and I touched on this yesterday on my Sunday video. So by the way, guys, if you don't know, if you are newer to the stream, just know that I do put out a Sunday video. I'm probably going to start making them on Saturdays instead of Sundays That way I can release them Sunday morning, and I'll just have it set up on a clock to where it releases like really, really early Sunday. And that way, those of you across the pond will be able to have access to that in your evenings, right? In your afternoons. Just give you something to dwell upon in preparation for the trading week. It makes sense. I've been following some other followers and some other mentors of mine, and that's typically what they do. They'll make the video on a Friday or a Saturday, and then just have the clock release it early Sunday. So that's probably what I'll start doing next week. Well, I should say this coming weekend, but nevertheless, I did still get it out a little earlier than I had yesterday afternoon. So, but yeah, on that video, I did touch on the manufacturing PMI data, the manufacturing sector there. So we're in contraction territory on this particular report. Okay. Anything under a 50 level is contractionary, and anything over 50 is expansionary. So as you can see, the previous number, 48.2. Now we are projected to go 0.1% of an increase, which isn't a whole lot, but it is better than nothing, right? So obviously the goal is always to get this number right here over 50, just to show that expansionary number. So that's the only thing that we've got for today. And I purposely left out all the other items. I mean, I could throw on the orange folder, which is the medium impact events on here, but didn't really see anything of note. I mean, Canada's PMI number will be on Wednesday. That's a medium impact event. Some of their flash estimates for their inflation reports, kind of the prelude or prequel, if you will, to the main one, the most important one, which is the red folder one. So yeah, I sometimes I'll leave that on just to see what those medium impact events bring about. And sometimes I'll dig into the yellow folder events, because even those light impact events have a sway on the currencies as an individual. It's like the Swiss manufacturing PMI number, just as an example, right? So that's something that I off screen look at, because it does factor into the algorithm I use for my top setups. But chiefly as far as the individual currencies, the 8 major currencies that I track. So yeah, but nevertheless, digressing back to the red folder events, guys, that's all we have for today. And then as far as tomorrow goes, Australia's inflation numbers are coming out. Okay. So they've got the year over year and the month over month number coming out, and it's a little bit of a mixed data there. So the month over month number, 0.1% of an increase. Okay. And then the year over year number is 0.1% of a decrease. So just a little bit of mixed data on that. I don't really pay as much attention to the trim CPI, because it's really all about the headliner. But even that one that one's actually scheduled to be a little bit less as well, 0.2% as opposed to the previous 1%, right? So that could potentially be the tiebreaker. I mean, if all these 3 data points were to come out right on the dot, which, as we all know, doesn't usually happen that way, then we could very well see a very slight decrease in the Aussie dollar. Okay, the Australia dollar loves inflation. Okay, the stock market doesn't, and that rings true for all the currencies. Okay, the dollar, the currencies themselves love inflation. They tend to rise, unlike the stock markets. So just remember, that's always a double-edged sword. As far as the action and reaction to the currencies. So that's Tuesday. Wednesday, got some more U.S. data. We do have the ADP non-farm change report coming out. Okay, previous number was a negative number, negative 32,000. They are projecting 47K this time. So that's going to be a good, if it comes out like that, that will be definitely good for the U.S. dollar. An hour and 45 minutes later, we do have some JOLTS job openings coming out, rather. Looks like a 2,000, is that right? Yeah, 20,000 less JOLTS job openings forecast. And then the ISM service, so the services sector of the PMI data, the Purchasing Managers Index, will come out, and it looks like it's projecting 0.3% less. Now, that number, unlike the manufacturing number, is in expansion territory. Okay, so just remember, like I said, when we talked about the manufacturing sector up here, it's under 50, meaning contractionary. But we get back down here, of course, to the services sector, and it's in expansionary. Okay. So it's in expansion territory, but obviously if this rings true and we do have a lighter reading, then obviously that's not as good for the currency, because it's all about the relationship of the previous number to the forecasted number. Okay. If you're missing expectations from what the economists are projecting, then it's not good. It's not good for the currency. Even if the number is a little higher or a little better than the previous week, if it's still under the projection, that's what really matters. I think a lot of people probably get that wrong. They see, oh, a report came out slightly better, and they think it's going to be good for the currency. But the key is, did it meet or exceed expectations from the economists? Right? That's the deciding factor there. So it can be a good report and still go down, because it all has to do with what the economists on Wall Street and everywhere else, what they project out with all their mathematical equations and this and that. So just always know that it's always important, the relationship between the forecasted number and the actual number. Okay. So yeah, that's Wednesday. Pretty good day there. That could definitely bring us some volatility on the employment front. Thursday is the inflation report for the Swiss franc, the Swissy. And that's going to be the month over month number. They're projecting a 0.2% increase. Okay, so again, that would be good for the currency, but negative for the Swiss stock markets, right? So again, it's that double-edged sword. It's that diverging relationship. Okay. And then, and that one's bright and, super bright and early here where I live, here in the States, 1:30 a.m. Central Time, where I'm at. But then later on, actually during our stream, we'll have obviously the weekly unemployment claims number coming out. Now, this one, unlike the previous two, is projected to go back up. So will definitely be interesting to see how this one comes out. Again, guys, the last couple reports, last three reports rather, have been down. So we had a pretty ugly spike back on December 11th report, as you can see here, for the unemployment claims. But then we did have three weeks after that of solid declines. Again, that's a good thing. Good thing for the currency. Anytime you're, the more people that are working, the better for the economy. It's really just as simple as that. So, but yeah, again, this one is projected to actually go back to 216,000, which would be right about where that line is right there. So will definitely be interesting to see how that comes out for the employment side of the U.S. dollar. So that's Thursday. And then Friday is our big day. It's a big old day, Friday. Okay. Canada, of course, has their more of their unemployment numbers coming out. Employment change not looking really good at all as far as that number goes. Their previous number was 53K, projected to have a 5K decline. Okay, minus 5,400 to be exact. Okay, so that's the employment. That's people working. And then their unemployment rate, which isn't the greatest, I got to say. It's not the greatest. Okay, they have a 6.5, but they are projecting a 6.7%. So a 0.2% increase. Again, that's more unemployment, meaning less work, meaning less money flowing into their economy, GDP and otherwise, right? So that's the Canada numbers. And then at the same time, and this is on our stream as well. Okay, this will be the last 30 minutes of our stream on Friday. We got the dollar employment numbers coming out. Okay, now this is the big one, non-farm employment change. Okay, so keep in mind on Wednesday, we have the ADP specific number coming out for the non-farm payroll, which is the biggest employer software here in the U.S. and among other countries as well, but specifically here. But this is the overall number. Okay, so, not just relegated to the ADP software, right? Good morning, Alex. Yeah, I'm here. So, yeah, I kind of let off on the outset, Alex. When I created my live stream link yesterday, I knew something was fishy because at the bottom, it did not say webcam. It said third-party software as far as my cameras. So I talked to Grok. Grok said it was fine. It was going to work. And then I popped on at 6:30 a.m. my time. It didn't work. So I had to scramble and create a new link. So Yeah, apologize for that. As always, I'm a trader. I'm not the most techie guy. I'm actually taking in the middle of an AI course right now, trying to get better at some of this stuff, so that I don't have as many F ups. Let's just say, right? So anyway, you found me, and all is well in the world. I appreciate you showing up, my friend. Yeah, all is well. Good stuff. And yeah, let me know. Let me know if there's any specific tickers, currency tickers, okay, Forex tickers, index, Bitcoin, gold, silver, um, you know, any foreign indices, any of that thing, any of that stuff. Let me know if there's anything specific you guys want me to look at. I've got a list of things I'm going to go through, and I also have my trade I'm in. So I did a quite the ballsy trade, I got to admit, and I'll get into that as soon as I finish this right here. But yeah, guys, just to put a bow on Friday, again, we got the U.S. employment numbers. So we got the average hourly earnings, obviously the non-farm payroll we talked about, which is the big one. It's always one of the big ones, guys, the non-farm payroll. Our unemployment rate, which is projected a 0.1% decline or decrease. I just mixed decline and decrease into one word. How about that? Declean. So yeah, 0.1% decrease according to the according to the economists. And then an hour and a half later, we got the University of Michigan sentiment coming out. So that's a pretty good number for that UOM's consumer sentiment right there. Okay. Again, anything over 50 is expansionary. Previous number 52.9, projecting a 0.6%. I'm sorry, a 0.6 increase in that number to 53.5. So a lot of stuff going on Friday. Looking forward to that. And like I said at the outset, I don't know if you guys were on just yet, but looking back at last week, New Year's week, okay, we had just 2 items. Christmas week, we just had 2 items as well for the dollar. And that's it. So that's what I call boring ass weeks. Okay. This week, back to normal. This is the way I like to see it. Okay. Get some volatility stirred up. I like volatility. Okay. Volatility is a dirty word to some people, but it's a beautiful word to others. I love volatility because volatility tends to swing prices towards my supply and demand zones. Okay. So that's why I love economic releases. Now, obviously, I'm careful around those releases, right? That 5 or 10 minutes prior to the release of, and then 5 or 10 minutes, or sometimes even 30 minutes or an hour after. That's always the red zone, the no-go zone, right? You just want to stay away from it so you don't blow your accounts or breach your challenge accounts. So, but as always, guys, when those releases come out, it's going to go crazy for a bit, typically. Not always, but typically. And then you just wait until the volume starts coming back down to where it was halfway close to where it was before the release even came out. And pick a trend, latch on. Okay, that's the way I like to play it. News traders are crazy. They got balls of steel. They may win once or twice, but if they keep that stuff up, they're going to blow their accounts. So anyway, I digress from that, guys. That is our economic calendar for the week. I mean, it's still light, but it's definitely much better than we've had the last couple of weeks. Yeah, just looking ahead to next week, guys, it's going to be lighter than this week too. So we won't worry about that. I'll touch on this on my Sunday video coming up at the end of the week. So, okay, guys, we have got some top setups over here. Make sure everything's still sharing. Okay. Okay, good. We're good. Good to go. So as far as the top setups, by the time we look at the technical, the sentiment, and the fundamental analysis, this is what we've got for the week. As always, this is a very dynamic list. It's liable to change multiple times throughout the day, but at this moment in time, the U.S. oil is my number one item on my watch list. Now, the China 50 is on there because it does track the indices as well. I just don't have the ability to trade the China 50 just because none of the brokers I have it on there, okay, as a featured asset or as an asset to trade. So I always just ignore that one. But yeah, the most bullish assets I'm looking at the moment from a fundamental and sentiment analysis perspective is oil, silver, and NASDAQ. Now I'm already in a NASDAQ trade, and that'll be the very first one I talk about as soon as we finish up here. And then, yeah, just to put a button on the bullish items, New Zealand dollar. Okay. That's going to be the only bullish currency pair that I'm tracking at the moment. And then, of course, the S&P 500. Now, the Dow Jones is not on the list. It's down on the in neutral territory. And as always, it's so dynamic, that thing could jump on in 5 minutes, okay, depending on how these report releases happen. Now, we don't have a whole lot, like I already kind of mentioned. I mean, today we just have the ISM manufacturing PMI number coming out. So that should be the only one. And in fact, I'm just off screen. I'm looking to make sure there's no other medium or low impact events that factor in. Yeah. Okay. Switzerland's PMI for the manufacturing sector coming out as well. Yeah, that's not going to affect anything. Retail sales. Okay. Their retail sales numbers coming out. That's a yellow folder, guys. And this is what I was talking about. Even though some of these items may show up as low impact or medium impact, that doesn't mean I'm just going to fully dismiss them, because the retail sales number, okay, for the Swiss franc and the manufacturing PMI for the Swiss franc, that will change the strength of the currency. You know, depending on how it was released compared to obviously the previous number. So I will keep an eye on it, but from a big mover, the here and the now, yeah, it's really just the US dollar report today. Okay, so going back over to my top setups. Yeah, so that's it for the bullish. And then the only bearish item I'm tracking is the dollar Canada dollar short. The dollar South African rand is up there, but just like the China 50, I don't have it on any of my brokers. I can chart it. You know, I'll chart these. I just don't have the ability to trade them. So yeah, it's the one bearish item. And even at that, it's not that bearish. It's a -5, which just barely makes the list. Okay, when you add up all the technical sentiment, the growth, inflation, and jobs numbers, okay, you get a point. Okay, so for example, U.S. oil, it gets a point for some of these reports that have exceeded expectations. And depending on how big of a warm reading it had, it'll either give you a 1 point or 2 points. Like non-farm payroll for the previous period. Okay, it was such a strong release, it actually gave it 2 points. Okay, anytime you see a 0, that just simply means the economists got it right and they nailed that expectation right on the head. So it's not necessarily bullish or bearish, it's just neutral. So it just kind of cancels itself out. Excuse me. Let's see here. But yeah, that's it. Okay, I prefer items, whether it's bullish or bearish. I really prefer them 9 or higher if it's bullish, or -9 or lower if it's bearish. But look, I get what I get. And because I'm not the one that writes the rules of these economic reports, I'm just the one that has to take the information and digest it. So yeah, this is it. So I would consider this kind of slim pickings, to be quite honest with you. There's nothing very bullish or very bearish. It's just kind of, okay, you just made the cut. So think of back when we were in school and we were playing kickball or basketball or baseball on the playground, and the PE teacher picked 2 kids, okay, as team captains, and they picked their teams. And whoever the very last one was that got picked, that's basically what we've got today. They were just good enough to make the team, but not necessarily the superstar of the team, if that makes sense. Good morning, Xander. How you doing, boss? Good morning. Good morning. So yeah, that's basically what we're looking at with these top setups this week. It's basically the last person picked on the team. So hopefully that makes sense. Okay, without further ado, let's take a look at the trade I'm in, guys. Go here. Let me refresh this real quick. Okay, charts up. So this is the NASDAQ. I'm in this NASDAQ trade. Okay, I might pull this down here. All right, and this is my Ola Prime Challenge account over here. Okay, so with the NASDAQ, it was giving me a bullish score of a 6. Okay, this is what it was giving me all week last week. Price finally came down to and why I need to move all this. Oh, this is why. I knew something wasn't right. Had to get that out of my way. Okay. So yeah, we're paying attention over here. So if I go to a 4-hour time frame, or 2-hour time frame rather, sorry. If we're looking at this swing low and this swing high, okay, we got this 2-hour demand zone just kind of chilling out here. We had some pretty good volume coming out of that zone as well. Okay. Glad that. Oh yeah, you remember Xander. Yeah, you remember the trade. I think you were on when I was talking about it last week. So yeah, just to recap it, I mean, it dropped into this 2-hour demand zone. And if I go down to my 5-minute time frame, once it hit, I saw a nice looking bullish engulfing candle. So this candle right here, okay? Just looking at this candle right here. This is what I like to see when price bounces into one of my supplier demand zones. Get that bullish engulfing candle, close at the very top of the candle or bottom if we're looking at a supply zone. Excuse me. And then you just enter. Well, I actually didn't enter on the next candle. I actually entered 2 candles over, but yeah, basically enter above that area. So it's kind of a mini breakout, if you will. I don't call it a breakout trade because, I'm buying on a decline, if you think about it, right? I bought on this decline. But when you go to the smaller time frame, it's okay. It's okay to look at that as a breakout because you're on the smallest of time frames. And when you look at it in the higher time frame, in the context of the higher time frame, guys, you're buying on a mini downtrend. So keep this in mind. Anytime we get into a trade and using supply and demand, if you think about it, on the smaller time frame, we're always buying counter trend. Does that make sense? It's a counter trend trade on a smaller time frame. Okay, they always say the trend is your friend until the bend at the end. That's true. That's true on the higher time frames. But as far as getting the best price for a trade, right? Buying in discount, selling in premium, the only way to really do that is to buy or sell counter trend. But remember that that's always in context of the higher trend, which is the trend you want to follow, right? So obviously, going back to the 5 minutes time frame, okay, looking at this same spot, what have we got? Lower lows and lower highs, counter trend. So that's the goal, and this is how you get your discounts. Okay, discounts. But again, you look at it on the 2-hour time frame. Okay. Well, it's so that's the funny thing. It's technically lower lows and lower highs even on this time frame, but on that time frame. But if you go to a daily, well, it looks to me like kind of what do you call it? Kind of a. I mean, it's getting squeezed, right? Is that not kind of getting squeezed? That's what it looks like to me. But I'm buying more so on the fact that the fundamentals and the sentiment are getting that bullish reading. So it makes it a little easier to buy a sideways trend on a daily time frame or a downwards trend on some of these lower time frames, right? So at the end of the day, it's all about discounts or premiums if you're selling. So I took a stab at it. And yeah, what have I got to worry about now? Okay, what I have to worry about is this overhead supply zone that we're pulling into as we speak. Well, we're close to it. We're not quite there yet. Now, I got into this trade again, like I said, on Friday. Is that right? Friday. So I have kind of given myself a self-imposed rule of being out of trades on Fridays, okay, before the end of the session week. Before the end of the week session, right? So that I'm flat going into the weekend. Because what happens over the weekend, you just never know. A Trump tweet, a bombing, an invasion, whatever, okay, geopolitical type stuff. Well, normally what I'll do, because the market closes for me at 4 p.m. Central Standard Time on Friday. I always set an alarm for 3:45, so just 15 minutes prior, to make sure that I go and flatten out all my trades. Well, I forgot to do that. I saw the clock at 4:04 and thought, oh crap, I just left my trade open. I'd been talking about testing it back out again. I've said it before. I'll say it again briefly. The last time I held a trade open over the weekend was when the U.S. dropped the bombs on the nuclear facilities over in Iran. I had a trade gap up in my favor on the Sunday, and it was great. It was nice, but it freaked me out because it very easily could have went the other way. So that was the last time I had left a trade open over the weekend. Well, anyway, this was my first time since then, and I was sweating it over the rest of Saturday. I woke up Saturday and saw the news about the Maduro capture and thought, oh my God, I left that trade open. So yeah, I was sweating it Saturday, and I was sweating it yesterday, hoping that price didn't gap down below it, that it didn't gap against me, right? And I got lucky again because, as you can see, we did have a slight gap up when the market opened. That's this spot right here. And it's just been going up ever since, so it's in my favor. I mean, it's 204 on that account, 670 on that account, and where are we at over here? 407 on that account. So look, this trade's working in my favor. Do I feel happy about it? Yeah, but do I feel like it was skill? Well, yeah, because I mean, I picked a good spot, but there's a lot of luck in that because it very easily could have gapped against me. Okay, so I'm going to take the win because I've already moved my stop loss to break even. I'm going to slowly start trailing this thing up, especially once we get a little bit closer to the supply zone right here, because this supply zone, okay, very easily could take price and bounce it back the other way. It's just the reality, right? Very, very well could do that. I don't know. Nobody knows. So yeah, I mean, I got my stop loss here. Okay, my entry was here, and then my stop loss, I just moved it up here. I'm gonna probably trail this up a little closer on all my accounts, probably under this red candle right here. That to me looks like a pretty decent support, a little bit of a support level. Would you guys agree on that? Looks like that right there might be a pretty decent support. So I think I'll go ahead and do that now, actually, now that I think about it. Okay, again, this is my demo account for showing you guys examples, right? So already got that moved in $100 profit. Worst case scenario. So I'm going to go ahead on my other accounts and just move that there because I don't want to, at this point, it's luck. I'm going to take whatever the market gives me. So I'm going to move my stop loss over here. All right, so that one's locked in at $209. And this account over here is locked in at $264. So there we go, guys. We're sitting about $470, worst case scenario between my two accounts. On a trade I probably shouldn't have even been in. Because when it closed on Friday, I mean, it was, just a few bucks in the profit. Not like it was a whole lot. Okay, entry down here, close right here. So I kind of consider this a little bit on the lucky side because what I ended up doing was looking at, I used Grok. I enlisted the help of Grok to tell me, hey, what does this capture of Maduro mean? What does it mean for the markets? Okay. So just very simply, President Trump just captured Maduro, Venezuela. How will this affect the majors and the miners and the oil, gold, silver indices of Bitcoin? I just wanted to see what it said just so that I could follow along this week and see what the reality was. Okay. Doesn't necessarily mean Grok knows everything. And just because Grok says something, again, it doesn't mean it has to be 100%, especially when it comes to the markets. So I don't know. I don't know enough about Grok to know if it knows what the hell it's talking about. But I wanted to at least see what it had to say so that I can follow along and see what the reality is of all these different assets that I trade. Right. So basically what it came up with for U.S. oil to start with is short-term likely upward pressure. Well, that makes total sense. Okay. Venezuela is obviously a gigantic oil country. Problem is they're at very, very, very partial capacity with their output, their production. Venezuela used to, they used to pump 3 million barrels of oil a day. They used to. And now they're down to only about 100,000. So think about that decline. That's That's ugly. That's, I mean, I don't I don't math, but that's got to be, I don't know what percentage that is for 10, 20, 30, 40. I don't know. I don't know. Is that 5% of the peak? I don't know. I don't know what the percentage is, but nevertheless, that's very low. Well, their infrastructure is crap. It's all rotted and rusted and going to hell, and they just didn't do a good job of keeping on top of the maintenance. The PMs, right? What's the PM? That's the preventive maintenance. That's the words that I remember from my days in the warehouse world. Talk about a sweatshop, working in a warehouse, guys. I spent 10 years doing that in my younger years. But yeah, it was all about the PMs. Our maintenance people spent all day working on PMs, preventive maintenance, going around and lubricating and changing belts before things break. Well, that's absolutely not what they were doing in Venezuela with their oil rigs, PMs, because their stuff, again, it's basically going to hell. So anyway, I say all that to say that if, anytime there's a scuffle or a kerfuffle or a war or an invasion, what happens to the price of oil? Makes sense. It's common sense. Okay. It typically goes up. Now, it's not a guarantee, but it typically does. So short-term, likely upward pressure, like it says right there. So let's take a look at oil real quick. I just got an alert on dollar CAD. I'll tell you what, let's take a look at this dollar CAD alert first, because dollar CAD is giving me, keep in mind, a -5 score. Okay. So the Canada dollar is getting the favorability on the technicals, the sentiment. And let's see here. Yeah, looks like just is getting the edge on the fundamental side of things. So yeah, -5, want to short it, but I got to find a place to do it. Going back over to my chart, looking at the daily time frame, we are in a daily downtrend. Now we have come up to meet the most recent swing high. Okay, there's our green candle before the big drop. So that's my daily supply zone. Drop down to a 4-hour time frame, and you guys see I've got at the top of this daily supply zone, got a couple candles of basing action before a really nice decline. So that's a pretty good looking spot. And that's where we just entered in. That's where we just entered in. So let's see. Let's go down to a 1 hour and see if I can find a gap. Now there's gaps, fair value gaps on all these. Okay, here's another one on a 1 hour. Okay, you see our gap right here? Yeah. All right, I got gaps on all these time frames just for kicks. Let's go see what a 15. So I'm dividing by 4 on all these time frame declines, right? Okay, and even on a 15 minutes, we got a gap right here. All right. So there's our 15-minute gap. So this is pretty good spot, I think, to short. So I'm down to a 5. And now that I know that everything's lining up, just want to see if I can get a bearish engulfing candle. Okay. A bearish engulfing candle with some pretty good volume on it. Do I have to have a confirmation entry? I don't think I do, guys, because look, we're at the very tippity top of the, I really like this spot. We're at the very tippity top of this swing high. And what else do we have in the heart of that supply zone? We got a blue dashed line. What does that mean? Former support and or resistance line. And as you can see, this is the former resistance way back here on late June, before a big decline in price. You go and follow that line, got a rejection there for more resistance. Now we have a rejection as a support. Okay, we go through here, we have a little bit of rejection, but it does end up going through. Big candle, a big wick here. Okay, we're on a daily time frame, so big rejection on that candle. And then now we get over here to more recent rejection. Then we had a resistance rejection. Then we had another resistance rejection for like 4 days in a row there, and now we're back to it. I love that. I like this trade, ladies and gents. All I want to do now, and I'll go to my other my actual account here in a moment. But all I want to do is just look and see if we're going to start getting the RSI start roll up round in the corner over here. Oh, Let me get my camera back on, guys. Sorry. Sorry about that. Yeah, that's the one thing I have to fight with for a while is getting my thing to stop kicking my stream off. So anyway, guys, just to recap in case you missed what I was just sharing about the resistance lines. But yeah, just this is my daily, a 4-hour supply. So that's my confluence. That's the most important thing to me is getting that confluence. But then you see the blue dashed line, which is exactly where price is as we speak. Okay, that's going to be my resistance and support line, just going all the way back over. So resistance, 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 resistance. Now it turned into support here. Support, support. A little bit of support there. Here's a support. Here it's resistance, resistance, and resistance. So now we're back in there. So there's a lot of good things in this. You know what? I'm even going to look and see just for kicks. Let me see here. See what my VWAP shows. Yeah, I don't think I like that. I just wanted to see if the VWAP gave me a good, extreme high confluence of any type. I don't think it's doing that. Yeah, so probably, I don't think I'm getting a whole lot of help on VWAP. I mean, technically, it's went through this VWAP line if we used this swing high here. So, yeah, I digress on that. Let's just do this one for So, not really getting a whole lot of help from VWAP. So, it's just nothing more than just sitting here and watching on a 5-minute time frame to see if we start getting any type of rejection. Now, as you can see, it's already went through a little over half of the supply zone. So, I don't want to get antsy on this thing. I just want to sit and watch because see, it's just now hitting that blue dash line. Now, again, it's not the end all be all that former support resistance line. It's just nothing more than one additional odds enhancer. That's all it is. It is not a buying selling decision. The selling decision in this case is the supply zone confluence, the daily and the 4-hour time frame. It's just nice. It just so happens to be nice. We do have that former support resistance line going through it. So, and as you can see, we've only got another 5 pips before it goes through it. So it may very well not work out. But, and the other thing too is, and the other thing that keeps me apprehensive about shorting here is because if we take oh, wait a second. Yeah. So if we take a look back at our little cheat sheet that I came up with yesterday, what does this say right here? Okay. USD generally stronger. So that's as a result of the capture, right? Because a lot of people say that we're starting a war, right? That's what a lot of people are saying. Well, I would think if we're in a war, we're invading, right? I mean, you can look at it how you want, but are we really in a war if we dropped in 30 minutes, picked the guy up and left? I mean, are we still there fighting? No, we dropped in, picked him up and bolted. So I don't know. I don't get into the whole politics side of things, but we dropped, picked him up and left. It's not like we're still there fighting. So I don't know. I don't understand what everybody's freaking out about myself. But anyway, I digress. Again, guys, just looking at the result of what happened. This is what's potentially likely to happen. So dollar strength. Well, it's dollar strength because it would be, perceived as a U.S. win. Now, obviously, it could take the other end. Okay. You could get the markets just completely selling off, but we haven't had that yet. The oil again was up. It's slightly up. And just go back over here. I wasn't even sharing. So yeah, again, U.S. oil's slightly up. Okay, that's what it's projecting. Now, since this box, remember, that's my week open. So this is for me on Sunday at 5 p.m. Okay, so market opened We had a big, ugly drop, but then a quick recovery. Okay. So that's no surprise that when price came up to this area, we had that big, ugly drop. Again, this wasn't that long after the, hold on, guys, my stream went down again. Get this shared again. Yeah. All right. We're back on now. But yeah, so yeah, this ain't no surprise at all. Okay. Again, remember this this decided likely upward pressure on oil, right? And they're talking about obviously the barrels and all that. So so just going back to the price action, again, we got that. That's actually quite ugly. Let's take it down to a 1 minute time frame just for kicks. Let's go back to yesterday open on a 1 minute time frame. So remember, the red background is the open for this new week. Okay, slight gap up, big ugly drop, but then we retraced all that, and then we bounced into that overhead supply. And what happened? You guys see the volumes spread analysis candle grow just a little bit. We got a rejection from it. Okay, we got a rejection from it. Again, that's not surprising because we bounced into this 1 hour supply zone that had a pretty decent volume on the drop. So I expected that. You know, that's why I wasn't too excited about buying into oil right away, because I wanted to see what happened when it got through, you know, when it touched this supply zone. And now we've actually cut through the rest of it. So now that we've cut through the rest of it, I definitely would be interested in buying now. Now, I'll be honest, I would like to see it close. I would like to see it close up here, not just wick through and then escape the other way. Oh, gosh dang it. Gosh dang it. My chart up. Sorry, guys. I got to get better about switching what I'm sharing. Okay, so yeah, just back onto oil again. when oil opened on a 1 minute time frame, okay, remember the red background is the beginning of the new week yesterday. So we had that slight gap up. This is US oil. And then a big ugly decline, but then we had a really strong rejection. Okay. And then we just went up. So that was the reaction of the opening bell yesterday for me here in the States. Going back to a 1 hour, we bounced into this supply zone right here and then had a big decline. So new lower low. Well, it looked like we finally caught a bid down here in the rest of this demand zone. Okay. Now it did wick through it, but the unfilled orders from these couple demand zones, you know, is potentially what helped it to kind of slow down and go the other way. So now what have we got? Well, what I would like to see is this candle close. So we're on a 1 hour time frame. I would like to see this 1 hour candle close above this area, above the rest of this red box, this supply zone. If that were the case, then maybe I'd be interested in a return to this new demand zone down here. And I'm going to clean this up a little bit so I can get some of this out of the way real quick. Let me just do that. Get all this nonsense out of the way. Okay, so we've created this new demand zone. Now, I am not interested in this demand zone on a 1 hour time frame, because if you think about it, if this is 1 unit, the range of this zone, okay, if that's 1 unit, I need to see 3 units on the other side. So that's 0.61, it looks like, or 0.6. We'll just keep the math easy. I need to see 6, 12, 18. I need to see 1.80 on the other side, which is actually going to be a little higher up. I would prefer to see that the price go at least this far away, okay, before returning to the price as a demand zone. How you feeling about Kiwi dollar? Yeah, it's one of my bullish assets. We'll take a look at it in a moment. I know it did hit a demand zone, and it chopped through it just because I didn't quite see. It just didn't quite look great. So we'll take a look at that as soon as I finish my thought on oil here. But yeah, so it's just really kind of a sit on your hands type of thing. Okay, you guys see I've got an alert down here for oil. Let me go back to my 4 hour. Yeah, we get this. Okay, so you guys, this is down here pretty close to the Well, it's not the origin, but it depends on how you look at this. Obviously, this is the overall origin of the strong move up, but this is really where the move started getting a little bit on the parabolic side. So I want to keep an eye on this spot, but the challenge is that wick right there actually touched the zone already. So if I zoom in, did that wick right there, did that wick touch this wick over here? Okay, sure did, didn't it? Right? That wick wicked in. So rather than have my normal darker green box, I lightened it up, just telling me there's something to be sketchy about with it. Below it, though, I do actually have a smaller time frame zone on a 1 hour. Okay. So here's my 1 hour time frame. There's my big red candle with a gap above it. Not the greatest looking gap. I mean, there's your gap right there. Okay. That's the gap between those two spaces. So the top of this wick and then the bottom of this wick. We always, ignore the leg out candle. We have to look at the second candle. And this is the other thing I'm not excited about. This candle, this leg out candle with quotes, didn't even go that far. So yes, I'm going to keep an eye on it, but it's going to have to jump through every single hoop I can think of. Bullish engulfing, wick underneath, volume spread analysis increase, break a structure to the upside on a smaller time frame, all that. So yeah, I'm just going to probably not be too excited about this at the moment. And oh, by the way, for me to really be excited about oil, I would like for it to break this downwards trending kind of dynamic supply zone I drew in here, this red downwards rectangle. And you got a daily supply. So if you can get a break and close way up here, then all this stuff down here is looking a lot tastier. Okay, a lot tastier. But at the moment, it's just kind of in a weird spot. Oil has been going down. This would definitely be a counter trend trade, depending on how you look at this. So yeah, we'll just let it be for now. Kiwi dollar, though. Okay, again, just to remind everybody, Kiwi dollar is giving me a bullish score. It's a bullish 5. Now you see that big ugly red box on trend. Okay, that means some of the moving averages are not in the favor of the bullish side. So let me see the rest of your question here. Entering a demand zone, but you famously say don't diddle in the middle. What do you think? Yeah, let's go look at the chart. Okay, so here's Kiwi dollar. Now, just a recap of this, we are in an overall daily demand zone. We are at the bottom. We are at the bottom of a swing low. Okay. Now, this swing low actually previously bounced into a daily demand zone. Okay, right here. Now that was a daily zone. If I go to a daily time frame, you guys, this will be its own standalone candle. Just like this one up here, which by the way, I'm actually just going to go ahead and change colors on this to light yellow now because it's already been down here for a couple of weeks. So what we're left with, we didn't really have a good looking 4-hour demand zone. So I went down to a 2-hour demand zone, which is probably maybe the one. Is that the time frame you're talking about, Alex? Because of what I see is this candle here. Now there's a candle down here, but it's already been touched. It's already been mitigated, right? So that negates that candle. That's the true origin of the overall strong move up. Problem is, candle's already been touched. So to me, that's mitigated. It's not fresh. We skip it. We ignore it. While it's not necessarily a demand zone in the traditional sense, typically you hear people say, for a demand zone, it's the last red candle down before the impulse move up. Well, over the years of studying supply and demand, I've come to realize it's just as powerful coming off of a green candle, if that's what it takes. 1 hour. Yeah. Let's take a look at the 1 hour. Yeah, exactly. I mean, as far as the 1 hour, you're looking at this candle here. So again, this 1 hour candle, though, formed off of bouncing into this 1 hour candle, right? So that was a pretty strong, potent demand zone at one point. Think about it. So let's isolate that for a second. Okay, so this is actually a pretty good little spot to dig into for a second. Now, obviously, that's the daily zone. So I'm just going to move these boxes out of the way for a moment. And you guys see, I got a lot of boxes over here. Think about this for a second. Okay, this was this was a potent demand zone at one time. It obviously bounced right here, and obviously bounced into this price point here, and then it just went up. So at one time, this demand zone worked out pretty nicely. Why was this demand zone so strong, in my opinion? Well, because it not only broke a structure, but it broke a previous supply zone. Look at this. Look at this candle here. Okay, that was a supply zone at one time, right? That supply zone. Let's see here. Yeah, that supply zone kind of broke a double bottom. Okay, broke a double bottom. Rather than getting trapped in that same double bottom and becoming a triple bottom, it forced its way down. So think about it. That showed that zone's strength. Now we come down to the next demand zone, and if that had strength, this had more strength, because this demand zone was strong enough on a downtrend to take out the overhead supply zone that showed strength, right? We did get a close up here too. So that makes this demand zone look really nice. Not only did we break structure, okay, but then we broke supply and we closed on the other side of it. So that made that a really good spot to buy, okay? Obviously, you see what happened. Price came back down, wicked in nicely, and took off. Those are really good moves. Anytime you can find a zone at the very beginning of a swing point, swing low, or swing high if it's a supply zone, man, jump into those every time. But anyway, yeah, in its wake, it created a brand new demand zone. So that's the one that you're talking about as we speak. So I'll just go ahead and delete that, get that out of the way. And by the way, we're at the bottom of the curve. So let's reset everything. Okay, swing low, swing high. We're in the bottom third. So I think you were asking about diddling in the middle. Yeah, I don't really see diddling in the middle here, guys. This is the beginning of an overall move, and that's where we're at currently. Now the problem is, okay, we've already visited this zone back here. So this drop in price here is where we tested that 1 hour demand. And what happened? Pushed up. Did it give us a 3-to-1? Looks like pretty close. Okay, if we got one unit here, let's actually do this. Okay, that's the 1 hour demand that you're talking about, that green box, right? Well, here's the problem. It's already been touched. So I, by definition, or by rule, would be coloring it light green, just saying, it was a former, demand zone. You could also call it at this point a support level. Okay, so we got that initial move up. It broke another structure, and now we look into a brand new, some brand new spots here. So let's take one more look at this 4 hour. Okay, 4 hour demand zone right here. And that one actually got, it looked like we had probably about a 2-to-1 reaction on this wick, albeit on very light volume at the end of a Friday shift. So I would have probably ignored that. The Friday shift, obviously the Friday intraday session we just had this past week. So I didn't really like this area. Now that's 1 hour. Or were you talking about this candle here? I guess I should clarify that. Yeah, you said it looks good on the 1 hour, but were you referring to this 1 hour candle here? Let me know if that's, Alex. Let me know if that's the candle you were talking about. Because if you're talking about this 1 hour candle, then I wouldn't personally be interested in looking at that on a 1 hour time frame, because if you measure the range, so from the top of the wick to the bottom of the wick, okay, that's what, 8.5 pips. What's 8.5 times 3? 8, 16, 24, 25.5. 25.5 pips. Friday, December 19th. We were talking about New Zealand dollar, right? 1 hour. Let me look here again. December 19th. Oh, Yeah. Okay. Yeah. So that was the candle. Yeah. I mean, it's old. It's mitigated. Can't use it anymore. You could have used it. You could have used it on the last day of the year, on Wednesday, because that's when it actually hit. And as you can see, yeah, it did get a pretty good bounce, pretty good reaction. So yeah, at one time that demand zone worked out. But yeah, it's old news at this point. If that's what you're wanting to know, okay, it's old news. Once the zone's been touched once, I'm typically done with it. Because think about it, that's where the big banks, institutions, the hedge funds, the insurance, organizations with their $1 million orders, they've probably had enough time to get their order placed. So if they get their order placed, then price moves away like it did. Okay, price got in there, moved away. So they've made their money. They could have sold out up here, okay, or started their process of distributing their inventory. So it's dead after the first touch. Yes, right. Yes. Now traditional technical analysis books, Alex, will tell you that this turns into a support. Okay, let's just do this. Actually, yeah, they'll basically tell you. Let me scroll out a little bit. They'll basically tell you that this is a support level. Okay. I mean, there's a million and one ways to draw it up, but basically something like that. Okay. You got a touch here, a touch here, a touch here, a touch here, and obviously the touch here that we've got going on now. That's a hotly debated item. Hey, the more times a support or resistance line gets touched, does that make it stronger? Does that make it weaker? Well, it really just, there's a lot of gray area in a lot of this stuff. It just depends on the context. When it comes to unfilled orders, though, potential unfilled orders from a supplier demand zone. Okay, if we think about this from a 30,000 foot view, price consolidated and then it shot up or shot down like crazy. So and as long as it was just there for just a short amount of time, then that's not enough time for a bank or an institution to typically fulfill their whole order. So when price moves away, they know that, okay, because they're the ones that pushed it away to begin with. Okay, the banks are the ones that move price, not us as a retail trader. Okay, so price, when price comes back, they want to fulfill the rest of their order. So they have to start layering their order in, or accumulating their order, okay, as you hear in Wyckoff theory. So when price comes back, they want to get the rest of that order in on the way down. A little here, a little here, a little here. Get into the zone and then fill the rest of their order, and then they'll let price roll up. So they've filled their order. They've put their order in. So if they've put their order in, I don't have any interest in that price point anymore because the move's already been made. So yeah, long-winded way of me saying, yeah, I personally wouldn't be interested in it just because of that reason. Now, but if Kiwi dollar, which I drew this up last week, okay, if Kiwi dollar can at least break this this line here, let me get rid. You know what? Let me clean up some of these lines. I got a lot of crap over here. Okay, so I would like to see a couple things. Obviously, if we could break this structure up here, then that would make it a little easier to try to be buying this thing. Now I guess that'd be what, 40 pips, something like that. Okay, break up here and break this structure, then that would be my first signal that, hey, maybe the momentum's trying to swing back to the upside. But as currently, what are we getting? Lower lows, lower highs, especially on these smaller time frames. But even on the bigger time frames, guys, look, this is a downtrend. Now, right here, it was okay to take a stab at a counter trend trade because we had that fresh 1 hour demand zone that you asked about, Alex. So, and it gave us almost a 3-to-1. Did it? Let's go double check. Let's count that up. Yeah, 9. So we'll call that 10 points, 10 pips. Okay, so we got to 27.3 pips. So basically 2.7 to 1. So almost a 3-to-1. But, by then, once you got to 1-to-1, 1.5 to 1, you'd have brought your stop loss to break even. So you might have just had a break even trade or maybe a cup of coffee, as I like to put it. Okay. Anytime I move my stop loss to break even, I like to move it just a few bucks in to profit beyond the break even, just so it at least covers my swaps and fees. Okay. Maybe a cup of coffee as well. So yeah, depending on how you played that, but the point is, it's already been done. It's already been used. So there's not really a play down here. Now, if we wanted to really be aggressive, where it wicked in, okay, let's go to a smaller time frame. Okay, still just a big old wick. And I'm going to move this out of my way because I'm interested in this area on a smaller time frame. What we got? You could, sorry about that. You could probably see this as a smaller time frame demand. Let's go look. Let's go back again. Okay, so 10 minutes didn't. Well, yeah, I guess it did. So you could have looked at this as a 10-minute demand zone back in the past. Okay, that would have been a 10-minute demand zone, and this would have probably likely been another break-even trade though, because if you measure the range, okay, that's 7.5 pips. Go to the top here. That's 30, 7, 14, 21, 28. So that's a little better than a 4-to-1, right? So this would have been a pretty good spot on pretty decent volume. And what happened? Price came down, bounced in, bounced out, and started forming some higher highs. Now, ultimately, the dollar strength took over, because remember, with the invasion, or with the snatch or the kidnapping, whatever you want to call it, of Maduro, it's projecting dollar strength. So that dollar strength ended up taking over. But despite it all, it's still that demand zone still got a pretty good reaction, even though the dollar is supposed to have more strength. There's going to be ebbs and flows and all this stuff. So there, for a moment, it looked like it was going to give you your New Zealand strength because of that demand zone. But again, that's where the geopolitics kind of took over and dropped us down. So anyway, not really a play that I see at the moment on the Kiwi dollar. Again, I just really want to see, hey, can we kind of break these swing high points? Okay. Like I've kind of drawn up here. If so, then I would be interested in a newly formed demand zone somewhere down here. So until then, don't really have anything at the moment. What else we got, ladies and gents? Silver. So silver's on my list. Okay. Just giving you another look. Okay. Silver +6. So let's go back on to my silver chart. Now it's giving a bullish signal, but challenge is, okay, the challenge is, well, not really a challenge, but yeah, gold and silver is probably going to be looking a little bit on the bullish side because of this stuff. So short-term bullish for gold. Silver follows, but with more volatility. And keep in mind, silver's in everything. Okay, talking about the industrial tie-in there. Hey, silver's in everything. So silver, I like silver. Now on a 4-hour time frame, we are technically getting some lower lows and lower highs. Okay, so I don't. Now back here on this daily time frame, price got a pretty decent reaction. Okay, remember we had that 10.5% 2 Fridays ago incline, followed by that Monday, this past Monday, New Year's week Monday, of a 15-16% decline. So it technically gave us a bearish engulfing candle on a daily time frame. Did it not? Okay. Lower than the previous candle, higher than the previous candle. That's textbook bullish, bearish engulfing candle right there. But silver still, with the fundamental and sentiment strength, it just kind of kept it afloat. Now we had lower highs each day last week, but we kind of maintained a support level based largely off of that daily candle right there. Okay. I mean, think about it. You had basing action here, and then you had obviously the Friday increase. Okay. Friday the 26th, the day after Christmas. Right. So automatically I wanted to keep an eye on this area right here. Now I ended up getting into a trade on this one on Monday. Yeah, Monday, I think it was, after price came back down to this daily. So I made a few bucks on this little up leg right here. And then I think I stopped out. I trailed my stop, got out right around, I guess it was right around here somewhere. So made a few bucks on it, nothing too crazy. But yeah, ever since, guys, it's just been giving us lower lows and lower highs. Now, does this right here look like it might want to start turning around? Because we didn't get a lower low. Oops. Instead, we broke the structure. So we broke this supply zone. Think of this. Okay. Well, even whether you're looking at this thing on a 2 hour or a 1 hour, okay, we had a supply zone right here. So we broke a structure to the upside, and we actually closed. So could this be the turnaround from these temporary lower lows that we had last week? Lower lows, lower highs? Well, I mean, I would ultimately feel the most comfortable if we break this structure here. But there's also some supply zones we got to worry about. There's a 1 hour supply zone at the origin of that strong move down, right? And then you see we got another one down here on a 2 hour time frame. So got to be aware of these areas. Got to be aware of these areas. So, and then, so what's the play? I mean, I do have an alert set down here on a smaller time frame. Okay, 1 hour demand right here. And part of the reason I kind of like that area, even though it's really kind of going against the trend, is because we got a triple bottom, 1, 2, 3, or maybe even a quadruple bottom, depending on how you see that. So think about it. All the people that bought in this daily demand zone, okay, whether they were looking at it from a demand zone perspective or a support perspective, they got a lot of stop losses underneath those areas. Okay. Got stop losses. I mean, look, you got stop losses here. Oh, shoot. I didn't mean to do that. Stop losses here, which are going to be sell orders, right? Are those going to be sell orders? Yeah, because these people that bought here had to put their sell orders in, their stop losses. And I'm going to turn my magnet off for this real quick. But then you had more, you got more stop losses here because of these buyers. You got more stop losses here because of these buyers. You got more stop losses here because of these buyers, right? Now, you don't know exactly where those stop losses are, but they're generally in this area, right in that daily demand or that 1 hour demand zone. So that's why I've got my alert there, because I'm looking at this as a liquidity play. If we just so happen to, come back down to that area. Guys, I'm in for another 12 minutes. So if you have any other last minute tickers that you'd like me to look at, just give me a holla. I'm basically going to be spending my day working, but every so often I'll be keeping an eye on, my NASDAQ trade just to see how we're looking. So just kind of going back on over here real quick to my NASDAQ while I take a drink of water. We are getting close to that supply zone. Okay. So I'm keeping an eye. I've already moved my stop loss below this little swing low area, this little mini support level, if you will. Okay. So that's where we're currently at with that. Hey, this account started at 50K when I got it. Looks like I got it over 51 now. Yeah. All right, guys. So yeah, at this point, here's the thing. At this point on this NASDAQ trade, since I've already moved my stop loss into, almost a 1-to-1 profit, not quite, but almost. The important thing isn't exactly moving it 1-to-1 or, break even 1-to-1, 2-to-1. What's important is where is my most recent swing low, so that I can make sure I'm underneath it and give it a few extra pips below the low of it to give it some breathing room, so that hopefully if price does come back, it grabs some unfilled orders here. I mean, let's look at this on a smaller time frame. Look at this. This is beautiful. Okay, guys. So you see where I have my stop loss trailed. Well, what do we have right above it? We got a demand zone. Look at this. Look at this. Okay, this is going to be soon after the London Open. What do we got? Demand zone.
So we had a base, and then we had a gigantic candle coming out of that with volume. Okay. And then it just kept going. So the reason I'm excited about that is, think about it. If I were not in this trade, I would be interested in possibly buying there on this retracement. Okay. This is a 30-minute time frame. 30-minute time frame. Now I'm in the trade already, so I'm just going to let it be. Okay. I want to lock in my unrealized gains if price goes against me. But if I weren't, that's a potential place to get in. I'm not saying it's a great demand zone to be buying on, but it is one nevertheless. So yeah, the reason I bring this zone up is to say, hey, look, I got a little bit of a buffer helping me out. If price were to kind of go against me here, I'm already profiting this much where you see that red line. Okay. So from this green line to this red line, that's my locked in profits, no matter what happens. But it's just nice to know that right ahead of that, I've got a demand zone to possibly give me that bounce and keep going. So again, I'm going to let this thing do its thing. And if it has the strength to break through this supply zone, great. If not, oh well. I've obeyed all my rules. I've locked in gains below the most recent swing low on some of these smaller time frames, which in this case would be the 30-minute, because again, that's where a demand zone is. So I like it. Do I anticipate it being able to break through that supply zone? Well, I don't know. Let's look at this volume over here. Look at this. Look at this supply zone. Okay. Again, let's go back to the 1 hour. A 1 hour green candle before the big ugly drop. Now, did that drop have the strength to bust through a lower level demand zone? Well, no, because that's the demand zone I bought on. And remember, I waited for the 5-minute engulfing candle to get into that trade. So this supply zone, as strong as it looks and as much volume as it has, still didn't break through that lower level demand. Okay, the 2 hour demand. That's why. That's partially why. I mean, actually, technically, you could look at that as a 2 hour supply as well. It looks just as good. So this 2 hour supply did not have the power to break this 2 hour demand. So I'm going to just sit here and feel pretty decently good about the fact that I believe price could break through the rest of this, break through the supply zone. And then I can trail my stop loss up even further, my trailing stop. If we can break through this and close on the other side, then I'll trail my stop, probably right underneath the original zone to begin with. So remains to be seen. We'll see what happens there on that. Aussie yen. Let's take a look at that for you, Alex. Aussie yen. Yeah, let's take a look. Let's go back over to my other chart here. Aussie yen. From a fundamental and sentiment point of view, it is, I think, kind of neutral, meaning it's not really giving me a strong signal either way. But for the sake of the technical side of things, daily time frame, we're up. Oh, this is funny, guys. This was the chart I left my gold. This is the most ridiculous thing I've ever seen. It was a gold toilet that sold in an auction, some crazy, rich person auction for like several $1 million. Can you believe that? Can you believe somebody would pay millions of dollars for a golden toilet? Look at this thing. That's when you know you got too much money. When you're paying millions of dollars towards something like that. So it's funny you brought up Aussie yen, because yeah, that's where I left that picture from an episode a few months ago when me and Coach Richard were talking about the hell were we talking about that day? It was an auction of some type. I can't remember what we were talking about. Price of oil or price of gold and silver, maybe. I can't remember, but yeah, anyway. So back to the chart. Sorry about my sideways move there. Daily time frame, it's nothing but higher highs and higher lows. On a daily time frame, Alex, I do have a daily demand zone here. Okay, it's gonna be this green candle before this big expanded range candle up that broke a structure and ended up closing above. So a return to this price level would look pretty nice, I gotta say. Is it toppy? Your question was, is it toppy? Look, markets they can remain irrational longer than we can remain solvent. So if it's up, I'm going to keep assuming it's going to go up. If I want to say it looks toppy, I wouldn't think it would necessarily be toppy unless we get up to this area up here. Because as you can see, I've got a weekly supply zone. All right, you got to get the toilet out of my way. So we got this weekly supply zone. Look at this. Okay, we got a big, well, whether you put it on the red candle or the green candle. Well, no, we can't. Hold on, let me turn my. All right, let's go back over here and look. I had to turn my magnet on. So I'm looking at this as a supply zone, a weekly supply zone. Okay, it's going to be this red candle here. I don't want to look at the green candle because it looks like it's already been mitigated. What do I mean by that? Let's go look. Let's go zoom in. Did the bottom of the green candle touch the top of this wick 2 candles over? It did, right? So because of that, even on a weekly time frame, that zone's been mitigated. So I go to the next one. The next one is the red candle right after it, right there. So that's my weekly supply, because think about it. Consolidation and then big ugly drop. I mean, the bottom just fell out of that for a month solid on Aussie yen, right? So I have to keep an eye on that zone. So that would be toppy to me. Okay. That would be toppy whenever we start getting into this area. But specifically, okay, and the weekly is obviously orange, but the yellow is my daily. So just going to my daily, okay, just going back over here. Would I be that worried about the lower part of that weekly supply? Possibly, because, I mean, as you can see right here, we do have another daily candle. Is that not a daily supply? Yeah, it is. Again, daily time frame, so I'm going to keep it yellow. So yeah, I mean, really, you've got a couple daily supply zones, so I've got to draw it up if I'm going to stay consistent, right? Let's get that one drawn up over here as well. So that's where I would think it would be, quote unquote, toppy, as you put it. So we're a ways away. We're still 150, 200 pips away. So to me, well, first of all, price likes to go and bounce off of higher time frame supply and demand zones. So there's your higher time frame zone. So yeah, as far as buying goes, I'd be okay waiting on a retracement down to this daily demand. Why is that? Because inside of that demand, I've got a 4-hour demand, and that's my favorite confluence in all of the world. And not only do we have our confluence, but we've also got a bunch of white lines there. So that means if I go down to the 1 hour, the 30 minute, the 5 minute, okay, I've got gaps on every one of those time frames. Right? So this is what I'm looking at. This is what I would want. This is, if I were to buy this trade or buy this asset, that's where I'd want to buy it. I'll just delete that. Start over. Okay. Just simply drop down here. Preferably, now I have to keep an eye on this white line ahead of it because that's a smaller time frame gap. Okay, so whether it's here or anywhere in here, this is where I would like to buy this asset from a technical aspect. Let's go to a 5 minute real quick. I know we're about out of time. Well, that might be too far away now that I think about it. But oh no, here we go. So yeah, guys, here we go. 5 minute time frame. Okay. I guess it would be a 30. Anyway, yeah, that general area, you can't really go wrong no matter where you buy in this area down here. But that's where I would want to buy. All this up here is just sideways, choppy, 2.5 weeks of crap. It is. It's too consolidating. See that? That's too much congestion for my taste. I mean, maybe for the way you trade or other people. Maybe you could, whatever your trading style is, maybe it will give you a signal. But for me, for my signal says I need a discount. I'm cheap ass. Okay. I need a discount. So my discount, for the way I see it, would be down here. And you see, I did along the way draw some smaller time frame zones, which looked like worked out. What did I have over here? A 2-hour demand? Yeah, look here. See, I drew up a 2-hour demand last week on this. Price bounced in, would have been a profit, but it just wasn't giving me a bullish signal over here on my top setups. So that's why I ignored it. So Guys, that's about it for me for the day. We have reached 8 o'clock. Again, I'm just going to spend the day, well, not spend the day, but this will be the only thing I'm really focused on today is just seeing how price reacts once we get into this 1 hour, 2 hour, 30-minute, and 15-minute supply zone. You guys see all the white lines there, right? Could this be the point where it pushes price against me? If it does, well, I've already locked in some unrealized gains. Okay, I've got that at minimum because I bought in my demand on a 5-minute bullish engulfing candle. I got lucky because price gapped up. Okay, this is after digesting the news of the Maduro capture, and it's just kept going. It really has had no upwards resistance. It's just been up and up. So I guarantee you, though, we're about to get some resistance because of this supply zone. So even if that's nothing more than we jump in, get knocked down, and then come back up, okay, that's still a reaction. That's still a rejection of some type, at least on a smaller time frame. So I won't be surprised if it knocks price back down to this demand zone. I won't. Okay. Because I believe that on that 30-minute time frame, if it does knock price back down, I believe there could potentially be some unfilled orders because of this strong rejection leg that we had. And it would push price up and keep me, keep growing that unrealized gain. So this is my line in the sand. I've already put it there. I believe it has a chance of pushing through. Okay. So far, the market is digesting from the way it looks like it was a big U.S. win. Okay, the capture. So it doesn't matter what our politics is on this stuff, guys. It doesn't matter. Politics aside, okay, we have to look at the realities of oil and indices and Bitcoin and the currencies, right? Does it affect them? And then you have to kind of weigh, okay, is the market going to take this as a positive? Is it going to take it as a negative? So far, just in the early going, the U.S. indices is looking like it's a positive. And it makes sense because it's perceived as a win, right? Took somebody out of the country that's, allegedly, right, in the middle of all the drugs and the narco terrorism and all this, obviously crimes against humanity. So that's a good thing, but everybody's, everybody here in the U.S. gets their due process. So he's in New York. He'll be getting, I think today is his first hearing arraignment or something. So anyway, guys, I think that's about all I got for now. Hopefully you learned something today. I'll be back tomorrow, same time, 6:30 a.m. Central Standard Time, and I'll let you know how this NASI trade is looking, assuming I'm still in it at that time. I may close it today depending on how it reacts around this supply zone. So with that, ladies and gents, peace, love, and chicken grease. I'll see you guys tomorrow.